The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I'm your aggressive growth stock strategist here at Zacks. And I'm here with two more stocks for your aggressive growth radar screen. So let's just get right into it here. The first one we've got is Kratos Defense and Security, and that's KTOS. It's a Zacks rank number one that gives it a strong buy. And as with just about all these videos that we do here for the aggressive growth videos, we got an A for growth. And we have an F for value, and longtime viewers will know that I love that divergence between growth style score and the value style score because it tells me right away that I am on the right path. I am looking for growth, and growth investors and value investors are inherently looking for different things. So let's take a quick look at why this stock is a Zacks rank number one. And we can see, boy, oh boy, it's a little difficult here, but let's start at the bottom here. We're going to take a look at these positive earnings surprises. We got a 300%, we got a 50%, we got a 166, a 100%. Feast or famine here, and it's been all feast. 154% positive average surprise. So we like to see that. If we look at the estimates, we can see this quarter, not much happening here. 7 cents just hanging out. This actually was down a tick from 11, but it was 90 days ago, and the Zacks rank only looks at things in the last 60 days, so it looks as that as a neutral, making the current year kind of a neutral 36-cent number. But here for next year, we see a 2-cent bump higher from 51 cents to 53 cents. And if we take a look from the 90 days back, so 47 cents. So we do have some positive estimate revisions here. If we take a look at the valuation, you're going to be, looking at a big one here. 65 times forward earnings. That's a lot. But we do see 12% top line growth rate. That's not what I'd like to see for a 65 times multiple. 4.5 times book is a lot as well. But a 4 times sales multiple tells me that the market truly values the products and services that this company makes. And we see margins, operating margins, moving up here. We got an NA last quarter, but moving up 22 basis points there. That's pretty good. And then here's the real rub here is net margin going from negative to positive, and I believe it was going to be positive the last quarter. So the overall, I mean, we're paying a lot for this, but This is why you're paying a lot for this, because the stock price has surged here in the last couple months, I guess. We see a great history of beating the number and the stock supporting there. Suddenly, the earnings estimates, really jumped up here. So the distance in between the colored lines is what we like to see, but the 2020 and the 2021 numbers, they've just really moved up there. So that's what we like to see. And then obviously the stock jolted higher here, which is going to make all those valuations get skewed up a little bit here. In time, as the fundamentals catch up to the stock price here, you're going to see those valuations come back down, and this will continue to look good. But for right now, definitely KTOS, Kratos Defense Security, is a name to keep on your radar screen. All right, let's jump ahead to the next one, and it's Comtech Telecommunications, and the ticker for that is CMTL, Comtech Telecommunications. It's a Zacks rank 1. That gives it a strong buy, and it has an A for growth and a B for value, so not that terrible of a value score. Normally, I don't believe it when I see it like that, but, we're going to have to roll with it. Let's take a look at why this is a Zacks rank number 1. We're going to start again with these big beats. 216% is our average surprise over the last 4 quarters. So that is excellent to see. We can see estimates, going the wrong way here, from 29 cents to 10 cents. Next quarter holding flat at $1. But and here we are for next year, or for this year, again, moving down 88 cents, coming from a high of 96 cents. But we see next year the numbers already kind of turned up here from $1.20 to $1.28. So we can see that the Zacks rank cares more about the full annual numbers, and especially next year, because we want to see things improving for next year. We buy a stock not for what it has done, but for what it will do. And so let's take a look at the valuation on this one. It is a B on value, remember. So 32 times forward earnings. That's a lot. 15 times growth, that or 15% growth is pretty good. If we look at the price to book, 1.3 is pretty good, and 1.03 for sales is all right. Here we can see the operating margin looking better each quarter. That's good. Net margin, going the wrong way. Going the wrong way. We don't want to see that. But operating margin is good, so if they can figure those problems out, we should have an improving picture. And here is what we see with the chart here, and things are all over the place on this one, but we do see a ton of beats. All these green arrows back here, these are our red arrows, so those are our misses. But since then, all beating all the time, and it looks like the estimates, this estimate kind of got out of control up here, but now the 2020 number right here is moving up nicely. So if that continues, this stock could easily get back into that $40 range. And right now, with it trading below 30, that could be an incredible move for an aggressive growth stock. Well, that's it for this week. Be sure to join us next time when we take a look at 2 more aggressive growth stocks for your aggressive growth radar screen.